Welcome to your free crypto trading course. Whether you're brand new to trading or you've been dabbling for a while without consistent results, this course will give you the tools to navigate the markets with confidence. In this video, we're starting with the foundations of trading, understanding key concepts like support and resistance, identifying trends, and using basic tools on TradingView. This is just the beginning. As the course progresses, we'll move into advanced strategies, indicators, and trade setups. And the best part? It's all absolutely free. Plus, don't forget to check the links below to grab some free crypto to get started. Let's begin with the basics, support and resistance levels. These are the bread and butter of technical analysis. Support is a price level where the market tends to bounce back up, acting like a floor. Resistance is the opposite. It's where the price struggles to break through, acting as a ceiling. Here's how to find them. Open your chart on TradingView. Look for areas where the price has repeatedly touched and bounced. Mark these as support if it bounced up. Mark them as resistance if it turned back down. Why are these levels important? They tell us where the market might reverse or break out, giving us high probability trade opportunities. Now that you understand support and resistance, let's move to identifying trends. The market moves in three ways: uptrend, higher highs and higher lows; downtrend, lower highs and lower lows; sideways, the market consolidates without a clear direction. To spot a trend, use a trend line tool on TradingView. For an uptrend, connect at least two higher lows. For a downtrend, connect at least two lower highs. Trends are key because trading in the direction of the trend gives you the best chance for success. Remember the saying, the trend is your friend until it ends. Now let's introduce indicators to confirm what we see on the chart. Two of the most beginner-friendly indicators are moving averages, MA. Add a 50-period and a 200-period moving average to your chart. If the 50 MA is above the 200 MA, the market is in an uptrend. If it's below, it's a downtrend. Relative Strength Index, RSI. The RSI helps you see if the market is overbought, too high, or oversold, too low. Values above 70 mean overbought. Below 30 means oversold. These tools won't give you perfect answers, but they'll help you make more informed decisions.